Bitcoin is in serious trouble and is showing multiple signs of the price being cut in half in the not too distant future. Of course, this can be invalidated, but I want to go over my current concerns with the Bitcoin chart. Now, I know it is October and all of that nonsense, but to be quite frank, I will never, ever put more weight onto that type of nonsense theory than the charts themselves. If the charts agree with that theory, then that's totally fine. But the chart doesn't agree with that theory at this time. So let's talk about a potential Rectober theory instead here. You can see this mapped out here. I know at this point this feels very unrealistic, but hear me out here. I'm not saying this has to happen. I'm not even saying it's probable, but well, in my opinion, it is becoming more and more likely. I know I've been talking about this potential target for quite some time now, but I want to go over some reconfirmed reasons why I think it's absolutely possible it does end up playing out. For one, just fundamentally, yes, election season is right around the corner, so really anything can happen, especially on the weekly chart like this. I mean, yes, it could be invalidated at any time because they take so long to play out, but generally there's a lot of momentum in front of one of these longer time frame charts, right? But generally speaking, for those of you who do follow my channel, sit in on my streams and all that sort of stuff, you're in the discords, that sort of stuff, you know that I use these Stuber fibs religiously. And I know I don't stop talking about them. When there's a structure break, I love looking for that pullback to the 786, 886 Fibonacci pocket, and that's where I'm more so looking for entries rather than looking for that FOMO breakout play, because so often structure levels get swept and it becomes a liquidity grab, some sort of a fake out. And even if that structure is confirmed, like in this case here, setting a lower low like this, yeah, it's totally normal to sweep a level like this and then end up just going for a bearish back test. Just because this is a bearish signal does not mean that's the time to FOMO into a short, and people love shorting into support just like they like longing into resistance. And right now, this is the same setup we've had several times already since March this trend started, you guys, okay? I'm going to go into in a little bit here why Bitcoin, even on the 4 hour, and I know a lot of people say, oh, hey, there's a higher low printed and that sort of stuff. I'm going to show you my chart on the 4 hour that actually we haven't had a higher high set since March. So, I mean, it's been 8 months that we've been in this downtrend here. Where did we end up losing structure here? This is the weekly chart, but basically here, that would have been the start of April, I guess, kind of end of March, start of April. We end up losing these candle body support. When I zoom in, it'll be more obvious. But basically the way I look at this is now that we've finally retested this 786, I mean, I've been calling for this target ever since we bottomed around 49.5. And I said that at this level, everyone's going to start getting FOMO again, and we're actually just retesting resistance in a downtrend. So yes, we could absolutely smash through this and then smash all-time highs, but resistance is resistance until it's broke. We've been in a downtrend since March. Nothing has changed with that. So the way I would be looking at this, if this was any other time frame, I mean, I'm not trading the weekly with leverage, but I'm absolutely watching it as far as confirming a bias and why I'm so bearish in my trading. And I want to be clear about something, you guys. I never sold all my crypto. I still hold 85% of my portfolio. I just sold a small chunk of it at around 69K. That's totally fine. You know, I was buying down at below 20K. So, I mean, taking some profits up here, I have no problem. Even if we blast through, that's totally fine. I'm still holding most of my portfolio, but as far as trading as a hedge, I am definitely eyeing up the downside for the most part. Works as a hedge against my portfolio, right? If the market goes down, my portfolio is going to hate it, but my trading account is going to love it. And basically what I'm looking at here, if this was any other time frame, so just pretend these numbers aren't on the side, because number values can be very subjective, what you think is a lot and what isn't. What really matters is percentages and chart structure. So quite often, I mean, I know I have a bad habit of not even saying what these levels are in my streams and in my videos. I have a hard time actually acknowledging the exact price levels when I'm looking at things, because I look at structure so much more that I really don't care what the numbers on the side are. It doesn't matter. So in this case, all we have is a bunch of lower lows, lower highs, retesting Stuber fib after Stuber fib. If this one here is going to play out, just the range target that for my scalping strategy, just the range target, I go for that 214, and that's kind of down around 54k. I think on my other chart it's actually like 54.5k. That is not to say that's where I'm getting bullish. That's one thing that can be misunderstood. That's more so where I'd be starting to be cautious on my shorts. And yeah, I might end up taking a hedge long when we get down there. I'll see at that time how the chart looks on the shorter time frames. But as it stands right now, that's just kind of a safe range play more so. The thing is, if this was a 5-minute chart, a 1-minute chart, a 1-hour chart, any other chart other than the weekly, if I was in a short with that, my second target would be the actual swing. So the swing Stuber. So this is just the range Stuber, where that 214 would be the target. And the reason for a 214 is it's basically the opposite of a 786, right? If I pulled from the bottom because I'm looking for support instead, you can see the 214 just front runs it. So that's the reasoning for that target. The second target, like I said, is generally just the bigger Stuber fib here, and that's just pulling a Fibonacci right from the start of the swing to where we've currently topped out. So that second target, again, pretend these big numbers on the side aren't here. We're just looking at structure for what it is. My target would be way down here at the 786,886, which happens to be 28 to 22,000 US dollars. I know it feels very unrealistic. It felt unrealistic every other time we've had this exact same thing, from our COVID dump to our market cycle highs. Notice we came back into that Fibonacci pocket. We could even go from that market cycle low rather than the COVID low. And notice same thing. We're just below the 786 there, into the 786,886 fib pocket. The COVID dump itself was a 786,886 fib retrace there. The market cycle before that, we pulled into just below the 786, kind of right halfway between the two. Back here, we got a little one. This market cycle got one. This range got one. This range got one. Notice that it's a very common theme. And I know we can say, oh, this market cycle's different. Yeah, well, this market cycle was different from this market cycle, was different from this market cycle, was different from this market cycle, and we see the same structure happening over and over. And understand this, guys. If we end up breaking that 70K level, because that's actually still technically my lower high on this trend, and it'll be more clear on the 4-hour in a second, but until we break that level, nothing has changed. And if we do break that level, I'm totally open to the idea of becoming a moon boy again. You know what? I'm not a perma bear. It's just that the structure is there and I have to be cautious. It just makes no sense to FOMO into resistance in a downtrend for the last 8 months. Just take it for what it is. But I want to bring up this indicator. So this is something that just caught my eye a couple of days ago. Is every time with the MDX Algo Master, every time on the weekly we've got a sell signal except for this one. The first one last bull markets, around the market cycle top last cycle, that's the only time there's been failed signals, a failed sell as well as a buy. Other than that, every single time there's been a sell signal, we've come down to that macro 786, 886 Fibonacci pocket. So obviously it doesn't have to happen again, but we do have that sell signal. We have that resistance. We have all the reasons that I was already talking about as far as, you know, the Fibonacci's and stuff like that. These have back testing data right here, goes over with whatever sensitivity that it's set to, the back testing data. And I am on sensitivity 1 with this indicator. And out of 9 trades, I mean, the win rate is 88.89%. And the average move, I mean, that's skewed because that's taking buys into account as well. Generally, bull markets can go further than bear markets, right? But generally speaking, we get about a 50% correction to the downside with these sell signals. which ends up lining up in that 786, 886 Fibonacci pocket. So that's just another thing I noticed, like I said, a couple days ago. I already had this bias since June that this was possible. Again, not necessarily probable, does not have to happen, but it's been on my radar since my June 13th stream. Let's see, where was that actually? I want to find that now. It was something along the lines of the Bitcoin chart nobody wants to see 3 months ago, and I was talking about exactly everything that's been happening on this trend, right to the bounces and everything that we've been getting along the way. I went over this well in advance and why I thought it was very likely for all of this to happen. And so far it's just playing out to a T, and that's exactly why I refuse to get bullish at this point, because the theory doesn't end where we are right now. And again, if it's invalidated, totally fine, but it hasn't been yet. So now I want to hop over to the 4-hour chart. This is laid out. It might look like a lot right now. I can delete stuff as I go here, but very simply, we end up breaking our lows, lower low. We end up retracing up to that 786, 886 fib pocket, if you look to the left here. And then we end up dumping and setting a structure break, a lower low. We end up pumping to the new 786, 886 Fibonacci pocket. Boom, new lower low. Where did we get to now finally? And not only that, but we're getting to it slower. We're starting to see weakness. We never even made it to the 886 this time, but we did get into that pocket. And now we are starting our decline in this swing. So again, does not have to set a lower low, but at this point I see no reason why the trend has to switch. I know that a lot of people are considering this as, hey, we got a higher low. Well, that's no different than this one here. The thing is, on this trend right now, I'm actually going to delete a few things just to make it a little easier to see here. Sorry, let me just delete a couple more things. We also have this yellow box here. Just on this whole trend, it's obviously been an important support resistance level. It's been respected from many different areas in the chart. All of this, we just see this level respected so much. And again, we got another rejection at that level. On top of that, we had this upward sloping trend line here. We ended up flipping that from support into resistance. So yeah, there's a lot of things basically lining up to the downside, in my opinion. Just looking at this structure for what it is, everything's been absolutely perfect. If you're looking at this bearishly, this has not been tricky price action. We've had the exact same downswing, which I just talked about and why. This is the 4th time we're in the same bearish swing from that Stuber fib setup. This is like we've had the exact same trade setup over and over. If you're a swing trader, if you're missing these, then you might have to check your bias, right? Because as long as you're not FOMOing into the all-time high hype, this price action has actually been very healthy. It's painful to wait for because, on a 4-hour, it takes a lot of time to play out. But that's the thing. So many people look at the 4-hour, but they expect the moves to play out like a 1 hour or a 15-minute or a 5-minute. They expect it to happen right away. I don't necessarily think this market cycle's over, but I'm open to the idea that I think we're going to go much lower before we do end up going higher. When I was talking about people celebrating that this was a higher low, in my opinion, that is not a higher low, because since we set our 49K bottom here, and that was a lower low from this level here. What was our previous one? 53.2K approximately. The highest point between the two is up here at 70K. So that's my confirmed lower high structure. So we've been in this range since the start of August when we set our low at 49K. So since August, we've been in this range that ranges from 49K up to 70K. The high hasn't been taken out. The low hasn't been taken out. So all of this in between is just smaller ranges inside the bigger macro range. This is not left to interpretation. This is not my bias. This is not, just a theory. It's a fact that we just have lower lows and lower highs at this point. That's day one technical analysis stuff. So there's just no arguing that. Yes. Well, what if resistance breaks? Yeah, it will eventually. But everybody thought that the last 3 times that we've had the same setup going into resistance, and, even with Trump speeches and stuff like that, the market just sold off, rejected hard in that Stuber fib box. And so far, this has been no different. As far as liquidations, we're starting to see them both directions now. But there is still definitely some room to the downside, because there is still high leverage longs that need to be punished down here, in my opinion. And that would bring us all the way down towards 53.5K is kind of where that liquidity goes down to. That's 50 to 100x leverage positions and their liquidation levels. So forced trigger buys kind of a thing. So yeah, definitely potential there. Something else, actually, just when I bring this up, usually I just use this for looks because I'm just a sucker for all the bright colors. But also with the candle color, notice that they did flip bright red as we were trading into resistance there. So on its own, I don't trade based off the candle colors or anything like that. But it is just another sign of weakness as we're approaching resistance. So on its own, not that important, but where it happened is important in my opinion. On top of that, the Algo Master. In my last stream, I warned about this actually, that we had a series of higher buy signals, but then we did end up getting a lower buy signal. And our sell signals were trending to the upside. And I said that to me, with that lower buy signal, it looked, and with this flip of support into resistance, I thought it was quite likely we end up getting a lower sell signal. And now notice that on the 4 hour, we have sell signals and buy signals all trending to the downside. So I don't necessarily take every sell and buy signal. Like on the weekly, it's very, very accurate. And there's still good results on a lot of these. But the thing is that I really look for is which way things are trending. And right now, after we lost a whole bunch of important support levels, approached very important resistance levels, all of a sudden things are starting to trend to the downside again. Now, I do want to go over one potential bullish theory, and it actually led me to take a hedge long because I've been short all day. I actually took a short up at $62,297. And I also, just before starting this stream, I started a hedge long at $60,425 US. My reasoning for that is we do technically have a 1 hour Stuber fib here. So being I'm already in a nice short position, I have taken profits on half of it because we hit 2 of my take profits, right? First of all, like I was talking about my range target, you can see this little Fibonacci pulled up here. It was actually taken on the 5 minute, but I can't fit all this in on the 5 minute. So this was taken on the 5 minute, but we got this fib pull back to the 786, 886. I entered a short position, and first target is that 214 of that range. And like I said, my second target is the 786 of the full swing, right? Just like I was talking about on the weekly. I did the same thing on the hourly. So I was taking some profits there because I just see it as a buy level. That's also why, just in case, since this is a 1 hour and we do have the structure break here, because I'm looking at this as a low, lower high. We broke that. Now I'm looking for that Fibonacci pull back to the 786, 886, just like I'm always looking for basically on every time frame. So the fact that we came back down to this 886 and we actually ended up getting a 1 minute. So that's where I'm looking at it on the 1 hour. But then I zoom into the 1 minute to confirm my trade setup. So the 1 minute actually ended up getting the same setup, right? End up pulling a Fibonacci, just chasing the price as we climb here, coming back to that 786, 886 Fibonacci pocket, and I ended up taking a hedge long, just front running the 786 a little bit. This is basically an insurance play, tight invalidation. If we end up dropping our lows, then I'm out of that position and the short just continues running. But just in case this turns into something, I wanted to just, throw in that hedge. That's, if I can get into a short at resistance, pay myself on the way down and get into a hedge long at support, now I don't care what happens, right? Because if this long gets stopped out, then my short just carries on. I've already paid myself some on the short. I have zero risk there. All I risk it there is taking a little more profits if I end up getting stopped out on it. And the long will take over from there. So either way, I'm in a very stress-free position going into my evening here. I have nothing to worry about going to bed because I know I'm protected either way. So that's kind of my thought process there. So not all doom and gloom. I mean, obviously, yes, on the macro time frame, the midterm time frame, I am very openly bearish myself. I mean, not financial advice. You form your own opinions, do your own research. And really, at the end of the day, all that matters is execution, right? Theories are just theories. Unless you can actually act on them, then it doesn't really matter, right? So maybe I'm trading the downside and killing it, and you're trading the upside bounces along the way and killing it. Absolutely possible. So do whatever works for you, right? Some people trade one direction better than the other, kind of a thing. But that's kind of what I'm looking at. The short-term time frames, yes, I see it's absolutely possible that we get some sort of a recovery. But I just think it's going to be short-lived for all those reasons, like talking about on the weekly, on the 4 hour. There's just so much weakness that I see. I really don't see any sort of crazy momentum happening to the upside. Like I said, unless we end up breaking that Stuber fib, or that more so that lower high structure at about 70K. But even if we get above 67.7 and we get above that macro Stuber fib there, then you know what? I'm absolutely open to the idea that, hey, at least that's a very significant sign of strength, because we did not get that on any of these other swings. But so far, we got rejected a little earlier. It took longer to get there. The dumps on all of these swings, notice that they're getting more aggressive. And that's another alarming thing, is if we end up setting another macro lower low, also with wars escalating, uncertainties with elections, hurricanes going off all over the place. I mean, the world is in a very uncertain state right now. And I personally think that that's the perfect recipe for some sort of a quick, final, violent black swan market nuke kind of a thing. Obviously doesn't have to happen, but it's just kind of a gut feeling I have at this point. And I guess we'll have to see what happens from here. But anyways, legends, I think that's about all I wanted to go over today. So hopefully you found this stream useful. If these MDX algo indicators interest you, there's a link down below that gives an additional 10% discount on top of current promotions at checkout. Also, please do me a favor, if you appreciated this video and just my take on the market, it's I know a little different than what most people are saying these days. It's pretty lonely being a bear these days, but hit that like button and subscribe if you appreciate it. And with that, I'm out. Stay safe, my friends. Peace.